Now, analysts say they expect the negative sentiment at the Nigerian equities market to persist as investors position for dividend payout by listed companies. With the year-to-date all-share index at 10.5%, Muktar Mohammed, analyst at Assar Investment, joins us now to give us a sense of what to expect from the markets this week. Muktar, if you can hear me, let's have you bring us up to speed on performance of the market so far this week.
This week has been up and down, like you said in your report, and investors are being very cautious, especially moving from low dividend stocks to high dividend stocks. Some companies have declared their results here, like UCAP, United Capital, and also companies like Nigerian Brewery also have come up with their results. So when you look at those results, but you know, the key drivers of the market when it comes to the dividend season are always the banking sector, especially the Tier 1 bank. Any moment from now, we expect that the result of Zenith Bank should be out, because ordinarily that result should have come out yesterday. But hopefully before the end of this week, we might see that result, because if you go by the trend, the result normally comes out, would have come out yesterday or maybe during the week. So we are still waiting. But that you still cautiously from investors moving from low dividend stocks to high dividend stocks, and then being cautious also, and some taking profit in areas they have made capital appreciation, and trying to watch what the perception of those results will be from investors, and then begin to come back into the market to take position, especially when liquidity seems to be king in the Nigerian economy at the moment.
Well, looking at the all-share index performance so far, up 10.5%, that's not too bad. I mean, we're just in a month, just rounding up the month of February. What would you say has sustained the all-share index so far?
I think when you look at that index, you need to look at some stocks that really sustain that index. Some stocks like Guinness Nigeria, stocks like MTN Nigerian listed also has helped sustain the index to the level that it is standing now, and Boa Food also. Those were big capitalized stocks that came into the market, and so they've helped sustain the index. But for the normal stocks that have been there in the index for some time now, you could also see they also help in terms of price moving. Stocks move to the year high from 52 weeks high of recent, and then we have seen some stocks also take some bashing. But in that, you still believe that look at the market and you say, look, the all-share index is being driven strongly this time by fundamentals. But when those results start coming in, will we see those movements again? Will we begin to see the way we normally see in the market, that most of these prices have already been priced in, and we might just see the market not moving like we ought, or we'll wait and see. And you should not also forget that this market, as it stands now, is driven by retail investors and institutional investors in Nigeria. And most of these investors are short-term players. So we'll see when the numbers start coming in, what their reaction will be. We determine whether we'll be able to sustain this trend that we've seen now, or in going forward, we might see the market goes from a bullish run. But in terms of bullish run, like I always say, I'm not so confident of the bullish run at the moment, because of what sustained the bullish run normally are the foreign investors. And because of the FX challenges, we are not seeing those investors coming to the market.
Well, speaking about challenges, many of these companies, if not all of them, continue to operate in a difficult business environment. But what can you say to investor sentiments in terms of the expectations on the operating environment for many of these companies and how it could impact their bottom line going forward? Do you think that business sentiment is encouraging, is positive at this point? Or do you think investors, I mean, with high inflation, FX issues, you know, in a political and an election cycle, so many headwinds that the market will have to contend with, you know, going into the year. Do you think investors are factoring this in and, you know, being cautious about what their returns could be this year?
Well, Esther, if you look at what investors are looking at as it stands now, they are looking at last year, how the environment climate was last year. And that inflation also last year went down a little. and then we saw recovery, and we saw a little bit stability in the investors' FX windows, and also we saw the CBN trying to meet up with some demands also in the FX market. Then inflation, inflation has been a challenge this far because of fiscal policy. I keep saying have not done what they are doing. What we see in inflation is as a result of the work the monetary policy have put into. And when you look at some of this monetary policy in terms of what they are driving, especially the CBN, even if we're complaining that they have gone into space that we don't expect them to do, we see policy that comes out from the RX to 200. We see them trying to meet SMEs, 100 SME or 100 million. So there are a lot of indigenous policy drive that have made people feel a little bit optimistic about it. But we won't see these challenges that you just pointed out now. We begin to see the effect, whether those challenges are really going to be strong in this coming year, because it's going to be an election year, like you have said, and we are going to see governance taking the back seat and politicking being all the way all down there. So when those numbers begin to come in the first quarter, when those inflation figures begin to come, when those data from Bureau of Statistics begin to come, when the volatility of the exchange rate will it continue to go that space that it used to go with the CBN intervention, and then a game changer is going to happen this year. I mean, towards the end of this year, or whereby CBN said they will stop giving the banks FX to meet up with customers. This policy have effect on the economy, but in the short term, we are looking at inflation. We are looking at data that came from Nigerian Bureau of Statistics. It doesn't look bad as we thought when you see the GDP growth, and then you see a lot of sector contributing positively to the economy, especially the non-oil sector, like the banking sector, communication sector, transportation sector, and even the service sector. Then you begin to see it doesn't look bad. But when you look at power situation, you look at infrastructure, you look at the cost of doing business, you look at the cost of funding, then you begin to have a little bit of challenges with the data you are seeing.